Welcome to the deep dive. With all the buzz about trade wars and tariffs lately, one thing that keeps coming up is gold, kind of that safe harbor for investments.
Absolutely. And you can see why. I mean, the price of gold has really surged this year. We're talking roughly a 25 to 30% jump, give or take.
Yeah, it's quite something. And while, a lot of people might think about buying coins or maybe gold ETFs,
Right, the usual suspects.
exactly, we thought it'd be, well, pretty fascinating actually to dig into the companies that are, at the source, the ones actually pulling the gold out of the ground.
Yeah, the miners themselves.
Hmm.
So today, that's our mission, essentially. We're going to analyze the top five biggest gold mining companies. Yeah. That's based on their market capitalization.
Right. Okay. So let's name names or tickers anyway. First up, the biggest by market cap, that's Newmont, ticker NEM, valuation just over what, $62 billion?
Then you've got Agnico Eagle Mines, that's AEM, pretty close behind, around $60 billion.
Then in third, we have Wheaton Precious Metals, WPM. Their market cap is roughly $37.4 billion.
Okay. And number four is Barrick Gold, ticker symbol GOLD, at about $33.8 billion.
And rounding out our top five is Franco-Nevada, FNV, sitting around $33.1 billion.
So NEM, AEM, WPM, Gold D, and FNV. Those are our five for
All
today.
right, let's dive in then. First stop, financial strength.
Okay, financial strength. A good way to measure this, a key indicator is the assets to liabilities ratio.
Right. Basically, how many dollars in assets does the company have for every dollar it owes?
Exactly. And a higher number generally means, more financial stability. They've got a bigger cushion if things get tough.
Okay, so looking at the data we have, 2021 to 2024. Let's see, Agnico Eagle, AEM, looks pretty steady. Their ratio is kind of bouncing between 2.4 and 3.3.
Yeah, fairly consistent. And Barrick Gold, GOLD, shows a similar pattern, actually. Maybe even a bit tighter, between 3.1 and 3.3.
Okay. Newmont, NEM, is a bit lower, but also seems pretty stable in that 2.0 to 2.2 range across those years.
But here's where it gets interesting. Look at Franco-Nevada, FNV, and Wheaton Precious Metals, WPM.
Whoa! Yeah, those numbers jump out.
Right. FNV in 2021 had a ratio of, 33.62, and WPM was way, way up there at 136.77.
136, that's massive.
It is. And they kept those really high ratios going for the next couple of years, too. It suggests, a very strong financial base for both of them.
Okay, so based on that consistent strength over the period, even with some changes we see later.
Yeah, we're going to give them each a point here. One for FNV, one for WPM for financial strength.
Makes sense. But I do see, like you hinted, a pretty big drop in that ratio for both of them in 2024. F&V down to 18.96, and WPM fell quite a bit to 44.98. Still high, obviously, but
It's a noticeable shift.
yeah. What might be going on there? Any ideas?
Well, it's a really good question, and it probably relates to your business model. See, FNV and WPM aren't traditional miners in the same way as the others.
Ah, right. They're the streaming and royalty companies.
Exactly.
Yeah.
They often provide financing up front for mining projects, and in return, they get a percentage of the future gold or silver produced. This model can naturally lead to these very high asset-to-liability ratios.
Okay.
So that drop in 2024, look, it could be a few things. Maybe they made some big new investments or acquisitions which would increase their liabilities, or maybe there was a change in how their existing assets were valued.
Right. Accounting changes or market shifts.
Could be. But even with that drop, those consistently high ratios before still suggest, a fundamental financial robustness.
Gotcha. Okay, that context helps. Let's switch lanes now and look at revenue trends. How much money are they actually bringing in?
Right. Revenue tells you about the sheer scale of their business and, of course, their potential for growth through sales.
So table 2 here shows the revenue in millions for each company, again from 2021 to 2024.
And what's interesting, just looking broadly, is the total revenue for this whole group.
Yeah.
It's generally trending upwards over the 4 years.
Yeah, you can see that total line climbing, which I guess makes sense given the gold price was rising, like we said at the
That's
start.
probably a big factor, yeah.
Yeah.
Now, looking at the individual companies,
Yeah.
Agnico Eagle Mines, AEM, really catches the eye.
Oh, yeah, look at that growth. From about $3.9 billion in 21, steadily up, all the way to almost $8.3 billion in 2024. That's more than double.
It's impressive, consistent growth. Newmont, NEM, also shows a big jump in revenue in 2024 specifically, hitting nearly $18.7 billion.
Okay, Barrick Gold, GOLD, looks relatively stable, doesn't it? Kind of hovering around the same level.
Pretty much. But then you look at Franco-Nevada, FNV, and Wheaton Precious Metals, WPM.
Yeah, their revenue actually seems to be trending down over the same 4-year period.
It does. which is quite interesting given their financial strength and the rising gold price backdrop, something to maybe keep an eye on.
Definitely. So for this category, revenue trends, who gets the point?
Well, given that consistent and strong growth trajectory we saw from Agnico Eagle Mines, AEM,
Yeah.
right through the period, we're giving them the point here for demonstrating solid business expansion through revenue.
All right, 1 point for AEM on revenue. Now let's talk market dominance. Basically, what piece of this pie, this combined revenue, does each company command?
Exactly. We're looking at market share percentage here, shown in Table 3. And, theoretically, if you add up all these shares for our 5 companies, it should hit 100%.
Right. Or very close, allowing for maybe tiny rounding differences in the data.
Precisely. And what you see immediately is that Newmont and Barrick Gold are consistently the big fish in this pond. They capture the largest shares of the total revenue.
Yeah, definitely the heavyweights. Newmont started around what, almost 40% market share in 2021, and actually grew that to over 44% by 2024.
They increased their share. Barrick also holds a really significant chunk, though it dipped a little bit in that final year, 2024.
Okay. So for dominance, seems like Newmont's trend is notable.
Yeah, I'd agree. Considering Newmont generally increased its share over the 4 years, it suggests they're effectively grabbing a bigger slice of this market, outpacing some competitors. So we'll award Newmont the point for market dominance.
Okay, point to NEM. Next up, let's talk profit. Specifically, earnings per share or EPS.
Right, EPS. This is super important because it drills down profit to a per-share level. How much money is the company actually making for each share of stock out there?
And this metric, looking at Table 4, well, it can bounce around a bit more, can't it?
Oh, definitely. It reflects all sorts of things hitting the bottom line. Take Newmont, NEM, for instance. Quite a roller coaster. Positive EPS in 2021.
Then down into negative territory, losses per share in 22 and 23.
Right. Before swinging back positive again in 2024. That kind of volatility, well, it might make some investors a bit nervous.
Yeah, you like to see some predictability. On the other hand, Agnico Eagle Mines, AEM, looks more stable, wouldn't you say? And generally trending upwards.
I would. Yeah, started at $2.22 in 2021, dipped in 22, but then climbed steadily to $3.78 in 2024. That's a much more consistent picture.
Okay. And Barrick Gold, positive EPS, but it does fluctuate year to year.
And Wheaton Precious Metals actually shows a gradual decline in its EPS over these 4 years. Franco-Nevada also has some ups and downs there.
So, considering stability in the overall trend.
Yeah, given Agnico Eagle Mines' relative consistency and that general upward path for EPS growth over the 4 years, we're awarding them another point. That's their second point for demonstrating solid profitability.
All right, AEM picks up another one. That brings us to our final category for today, valuation. And we're using the price-to-earnings ratio, the PE ratio.
The PE ratio. Good old PE. It basically helps you gauge if a stock price seems high or low compared to the company's actual earnings.
Right. Like if a company earns $1 per share and the stock costs $20, the PE is 20. And people often talk about a PE around 20 as being sort of reasonable, a general benchmark maybe.
Yeah, it's a common reference point, though context always matters. So looking at our Table 5, Barrick Gold has a PE of 15.82.
Okay, below 20.
And Newmont comes in at 12.32.
Also below 20. So what does that suggest?
Well, it could suggest that relative to their current earnings, their stock prices might be seen as potentially undervalued by the market right now. Maybe getting more earnings bang for your buck, so to speak.
Okay. Now, what about the others? Agnico Eagle, AEM, has a PE of 31.49.
Above 20.
And Franco-Nevada, FNV, is quite a bit higher, 59.53. And Wheaton Precious Metals, WPM, wow, highest of the group at 70.15.
Yeah, those are definitely higher PE ratios. It might suggest the market is pricing in high expectations for future growth for FNV and WPM, or perhaps valuing their different business model premiumly.
So they might be seen as more expensive relative to current earnings.
Potentially, yes. High PEs can mean high expectations. But for our scoring today, focusing on that conventional value indicator of being below 20.
Right. Then Barrick Gold and Newmont fit the bill.
Exactly. So for having PE ratios below that 20 benchmark, suggesting potential undervaluation relative to recent earnings, we're awarding 1 point each to Barrick Gold, Gold AD, and Newmont, NEM.
Okay, points awarded for valuation. Let's do a quick recap. Tally time.
Sounds good.
Okay, so Franco-Nevada, FNV, got 1 point for financial strength. Wheaton Precious Metals, WPM, also got 1 point for the same reason, financial strength. Agnico Eagle Mines, AEM, had a strong showing, 2 points. One for that great revenue growth and stability, and one for their EPS stability and growth.
Yep. 2 for AEM.
Newmont NEM also picked up 2 points. One for market dominance, increasing their share, and one just now for valuation, that lower PE ratio.
2 for NEM.
And finally, Barrick Gold, GOL LD, earned 1 point, also for valuation, having a PE below 20. At the top, based on this analysis, our specific metrics here are Agnico Eagle Mines and Newmont. They seem to show kind of the most overall strength across these categories.